Hello and welcome. As you can see on the table, which we have seen in the previous lectures, in this table I told you how many occasions are there. There are two types of occasions. One is lifetime occasion, when we have to pay tax. Another one is death time occasions. Now during the lifetime there are two types of transfers which we can make. One is we can make a transfer to an individual, and the other one is a transfer which we can make to a trust. If we make a transfer to an individual, there won't be any lifetime tax, and there won't be any lifetime tax if I survive. If someone who is giving the gift, if he survives for 7 years, then they will not have to pay any tax if they have to survive. As far as chargeable lifetime transfer is concerned, we have to pay lifetime tax on that, but if we survive for 7 years, then we'll not have to pay any lifetime tax on that either. Right? Then comes the death tax. Now, death tax, there is only one transfer on death, which is death estate. So when you do not make any transfer, then the transfer would be made in shape of death estate. Now, on death estate, do you think will there be any lifetime tax? No, he's died. There won't be any lifetime tax on that. However, if we talk about death estate, yeah, there will be a tax on the death estate on that one. All right. Another thing which we did not mention here, as far as CLT is concerned, chargeable lifetime transfers, will have to take the gross value. As far as death tax is concerned, we'll have to take the gross value. All right. As far as the chargeable lifetime transfer is concerned, if we pay death tax on that, we'll have to take gross value. Now, what would be gross value? Now, in the lifetime, we would have paid some tax on CLT because there is always tax. So we'll have to take value of CLT and we'll have to add the tax which we have paid during lifetime, and whatever it is, that would be our gross value. Right? That is our gross value. So whatever tax we have paid, whatever the value of CLT is, if we add both of them, that would be our gross value, and we'll take the gross value if we had to pay tax on death. Right? If someone dies within 7 years. All right? So that is about taxation of inheritance. Now we will look at the death tax and how to calculate the tax on the death, including death estate, and we'll start tax on the death from the notes. All right? I'll just share the screen with you. Excuse me. As you can see on the screen, it says tax on death. Death tax on lifetime transfers. Now, death tax on the lifetime transfers, there are pets and CLTs. Now, if the transfer dies within 7 years of making a pet, it will become chargeable to death tax. Also, all CLTs made within 7 years before the death will become chargeable for death tax. Note it says, remember, calculate lifetime tax on CLTs first. Calculate lifetime tax on CLTs first, then move to the death tax, working through all CLTs and PATs in chronological order. Now, this is advice in order to do it in easier way. So always calculate the lifetime tax on CLTs first, because it will make the things easier for you. First calculate the tax on lifetime, then move to the death tax, because it is saying lifetime tax on CLTs first, because there isn't any lifetime tax on PATs anyway. So consider paying tax, calculating tax on CLTs first, which is lifetime tax, then move to the death tax. So take the first CLT, then another CLT, then another CLT. So there might be too many CLTs in the question. So there might be more than one CLTs. One CLT was made, gift to trust was made in 2007, then was made in 2009, then was made in 2012. So there could be many. All right. Now follow these steps to work out the death tax on pets and CLTs. The first step is to look back 7 years from the date of each transfer to see if any other chargeable transfers, CLTs or pets within 7 years were made. If so, these transfers use up the nil rate band available for current transfer. Work out the value of the nil rate band remaining. Now there are two types of nil rate band. as I have shown on the board as well, and I told you in the previous lesson that there will be lifetime, there will be a nil rate band for the lifetime tax, and there will also be nil rate band for the death tax. So there are two types of nil rate bands. All right. So it says we'll have to look back 7 years, and we'll have to see if there are any CLTs or PATs within 7 years were made. Then we'll consider them, and we'll have to see if they have used any nil rate band. And whatever the nil rate band they have used, if there is any remaining, then we'll deduct that one. Any part of the CLT or PAT covered by the nil rate band will be at the rate of 0%. Any part of the CLT or PAT not covered by the nil rate band will be at the rate of 40%. Note that a gross value of CLT will be used, which was worked out for computing lifetime tax. Now that's what I said to you on the board, that we'll have to take the gross value of this one. And now what is the gross value? We'll have to take value of CLT before tax, and we'll have to include the tax into it as well. So whatever tax we have paid, that would be our gross value. Now after calculating the tax, whatever the tax is, we'll have to reduce that tax by something called taper relief. Now what is taper relief? Taper relief is another relief which is given to the percentage of percentage reduction. So if someone dies more than 3 years after donating, then they will be eligible for taper relief. Now if years between transfer and the death, if 3 years are less than that, then there won't be any taper relief. If it is more than 3 years but less than 4 years, then it is 20%, then 40, 60 and 80%. Now this table will be given to you in the exam, so you do not have to worry about this table, so you do not have to memorize it. Alright. Now after that it says step 5. Step 5 says deduct any lifetime tax paid. This will only be applicable for CLTs. Now you will have to pay, you will have to deduct whatever you have paid during lifetime. This will only be for CLTs, as you know that there is no tax on potentially exempt transfer anyway. So whatever tax you have paid on CLT, you will have to deduct that tax. Alright, and that would be our death tax on lifetime transfers. Our next topic is death tax on death estate. Now if someone did not transfer anything during lifetime and he died, then that would be his death estate if he did not transfer, if he did not make any transfers. So that property will be included in the death estate. Now how to calculate it? Compute the value of death estate pro forma. We'll see the pro forma in a minute. Then it says look back 7 years from the date of death to see if any CLTs or PATs which have become chargeable have been made. If so, then transfers use up the nil rate band available for the death estate. Now whatever the nil rate band, we'll have to consider how much of the nil rate band is used. If there is any left, then we'll have to consider that. Now there isn't any special nil rate band for the death estate. The only nil rate band which was available on death, we will use the same thing, which in the most cases is already used. If so, these transfers use up the nil rate band available for the death estate. Work out the value of any nil rate band still available. Any part of the estate covered by the nil rate band is taxed at the rate of 0%. Any part of the death estate not covered by the nil rate band will be charged at the rate of 40%, it says. Alright, now how to calculate the death estate? The pro forma is given to you just on the next page. We'll have to take stocks and shares, insurance policy proceeds, personal chattels, cash in banks. We'll have to deduct some deductions, which is debts due by deceased and funeral expenses if there are any. And the realty is also given to you, freehold property. And if there is any mortgage to pay on that, we'll have to take that, which would be our net estate. And it says gift with reservation. We'll have to take them as well. We'll see what the gift is with reservation are in a minute, and that would be our chargeable estate. Now these are the expenses which we have to deduct. Before we move into these expenses, let's talk about a little bit about a gift with reservation. Now gift with reservation is a thing whereby if someone living in a house and now he did not had any other house to live in, he had only that house. Now although he was living in his house, but he has gifted that house to his son. After gifting that house to his son, he was still living in that house. Now what he has done, he has gifted that house, but he has made the reservation himself as well, because he is living himself. Now he has gifted that house, but he is living in that. That would be called a gift with reservation, because he is living in that house. So he has made the gift, but he has reserved the rights to live in the house. So that's why it is called gift with reservation. Now whenever the gift with reservation comes, you will have to include that into death estate, unless there are some conditions, but we will see later. That are not part of F6 syllabus. There is only part of P6 syllabus, so you do not have to worry about it. Then it says deaths and funeral expenses. Now these are the expenses which we have to deduct out of that. Now please make sure you read all of them. Please pause the video here and read all of these expenses. I assume you have done it. I'm just moving forward. And after that it says a transfer of unused nil rate band. Now if a person has died without using their without using their nil rate band, their spouse can take their nil rate band to use in their own tax death estate. Now how to do it? It says if a person who has died had a spouse who died earlier with any unused band on his death, then the nil rate band based on later death will be increased by the unused percentage of the nil rate band of the earlier death. Any election to claim the unused nil rate band by the spouse must be made within 2 years of the death. For example, if a nil rate band of Mr. B was £300,000 and B had unused nil rate band of £30,000, the unused proportion is in terms of percentage is 10%, isn't it? If A dies when the nil rate band has changed to £325,000, the B's nil rate band would be £325,000 multiplied by 10%, which would be 32,500. Alright, so whenever one spouse dies, whenever Mr. A dies and his wife was died earlier without using her nil rate band, then in calculating his inheritance tax, we will increase the nil rate band, not only his, but we will also add unused nil rate band of her wife, of his wife. So we will see that how much the nil rate band was as of her time. Say for example it was £300,000. Then we will see how much has he used, how much is still left. In our example it was left £30,000. So we'll have to take percentage. How much percentage was left? 10%. So when we'll consider his taxable liability, and we'll have to see and what is the nil rate band now. Now whatever the nil rate band is now, say for example 400,000, we'll have to take 10% of that, and we'll have to add that. So we'll have to update it according to our new nil rate band, not the old nil rate band. That's the way to do it. Alright, that was our nil rate band unused, transfer of unused nil rate band. Now it says basic tax planning for inheritance tax purposes, and after that it tells us a little bit about dates as well. Now this is just a self-study, as you can see. Please make sure you study it. It's just a self-study, basic tax planning and liability of inheritance tax and due dates. Now due dates for inheritance tax is later of, as far as lifetime tax is concerned, is later of 30th April after the end of tax year of transfer and 6 months after the end of the month of transfer. So it is later of these two. Tax arising on free estate death is payable by the personal representative or executors, and the time limit for that is 6 months from the end of the month in which the death occurred. So death tax will be paid after 6 months of the death. Tax arising on death in respect of death tax arising on death in respect of pets is to pay by donee within 6 months from the end of the month of death, and additional tax arising on CLTs on death is to be paid by donee within 6 months from the end of the month of death. So death tax is always paid after 6 months of the month of death, and whereas lifetime tax is paid later of 30th April and what was that? Later of 30th April and 6 months, sorry, later of 30th April and 6 months after the transfer, after the tax year of transfer. Alright, so that's it for this lecture, and I will see you in the next lecture with more bits and pieces of ACCA taxation. That's it for now, and I will see you in the next lecture. Goodbye.